So guys, welcome to this video of section 92B. Hope you have learned entire section of 92A. If you have doubts, please post that in Telegram community or we can discuss that during our weekly live meetings. Now we are come to section 92B. Let me just share the screen and we'll discuss what is section 92B all about. Let me just share the screen. So guys, if we see section 92B, there are two subsections predominantly. Sorry. First is 92B1 and the second is 92B2. Now under 92B1, if I just show you what is 92B1 all about is, basically it defines the term international transaction. We have already understood the term transaction when we were discussing in the previous video the term transaction. Right, now what international transaction means? International transaction means a transaction between two or more associated enterprises. We saw the definition of associated enterprises. Between two or more associated enterprises, either or both of whom are non-residents. And the transaction is in nature of purchase, sale, lease of tangible, intangible property or provision of services, lending or borrowing money or any other transaction having a bearing on the profits, income, losses or assets of such enterprises, and shall also include a mutual agreement or arrangement between two or more AEs for allocation or apportionment of or any contribution to or any cost or expense incurred or to be incurred in connection with a benefit, service or facility provided or to be provided to any one or more of such enterprises. This is what international transaction means. I'll not go more to speak on the B part, which includes everything, but I'll go ahead with the A part, which says that there should be a transaction between two or more associated enterprise, either or both of whom are non-residents. Now you may understand that in case if the enterprise that let me just put it this way. One of the enterprise is India and other is outside India. That is understandable. Alright, but what would happen in case if both the enterprises are out of India and then also that transaction needs to be covered and reported with the Indian tax authorities? Alright, why this type of provision? Because there could be business connection of one enterprise in India, though that enterprise may not be resident in India, but there could be a business connection, or probably that entity must be holding some assets in India, or probably that entity has earned any income, or there is an income which has been accrued or raised from India to that entity, and that is where they have also included two non-resident enterprises. Let me just give you a practical example also. Now, if there's a company called ACO in India, right, it has its own shares which are being held by B company which is based out of UK. Now there's a C company of the same group which is based out of US. Now B company and C company are both associated enterprise because they belong to the same group. Yes. Now if there's a transfer of that shares which are being held by BCO in ACO, the transfer of shares happens between BCO and BCO sells that or transfer that shares to C company which is in USA. Then the transaction of sale of shares by BCO to CCO needs to be reported by BCO in India. Yes, and that is where that particular transaction comes under the ambit of the definition of international transaction. The enterprises are associated enterprise and hence they have to comply with the transfer pricing provisions which are applicable in India with respect to selling of shares. This is what a practical transaction is, and that is where people do come and report their transactions. Let me also just give you there's no other example. I think this is one of the very best example which I have given. In all other examples, either of the entity would be in India, but in such type of cases also you are required to advise your client to file a report in India in case if such situation comes before you. So this was just for information. Yes. Now further, the definition also clarifies that the definition has been enhanced to include the dealing in such type of properties, like dealing in tangible property, dealing in intangible property, these are also called can be this type of transactions are also covered under the ambit of 92B. What I want you to focus here is that there are these financial transactions which are also considered as international transactions, though they may not arise any income directly, but still they are called international transactions, and hence we report that under form 3CB. What are these type of transactions? I want to draw your attention to this particular term called capital financing, which is funding of equity in an entity is also an international transaction. If you can just see from here, then purchase and sale of marketable securities or any type of advance payments or deferred payment or receivable or any other debt arising during the course of business. So what it means that if your associated enterprise has a receivable or payable as on 31st March or as on year end, then that particular amount is also called an international transaction, because that's a financial receivable, financial transaction, and there's a receivable or payable which you are required to make to that entity. So we also report that type of transactions under 3CB. If you remember, I also spoke about closely linked transaction in the definition of transaction, right? So we report it with the main transaction, but still we are required to report that particular amount of receivable or amount of payable as on 31st March under form 3CB. In case if you have seen 3CB, you must have also seen such type of transactions being reported. Even though they are not actual transactions, they are just capital balances like receivable or payable, or even if it's a working capital balance or sundry creditors, sundry debtors, but still we report in form 3CB. I am talking about the balances which are due to pay, which are payable towards AE or which are receivable from AEs only. AE is basically associated enterprise, right? Also, I just want to draw your attention to one of the key part of this entire definition which has been enhanced. So business restructuring and reorganization. A transaction of business restructuring or reorganization entered into by an enterprise with an associated enterprise, irrespective of fact that it has been bearing on the profit, income or losses or assets of such enterprise at that time of transaction or at any future date. Now here it gives an exception to what we read earlier, right? Now what could be this type of business restructuring or reorganization? So let me tell you that Act does not define this type of situations. It's just said that in case a transaction of business restructuring or reorganization happens, even though it does not directly bear on the profit, income, losses or assets of such enterprises, still you are required to benchmark such type of transaction. Now how it may happen? Now let me just give you 1-2 examples. Okay, so there is a multinational group who's having multiple say companies, right, in entire globe, right? There's a big multinational group. Now what happens? They must have certain supply chain, right? Probably if they are dealing in some pharma product or let me just put a very hypothetical example here. There's an also realistic example. Okay, so there's a multinational group which deals in selling of manufacturing of medical devices. Now what happens? They are basically based out of, let's say, UK, right? From UK they manufacture those devices, and in each and every continent or region, say Asia Pacific or EU or say US, they have many entities in many countries. Now they have also, previously what they used to do was that the entity from India used to place order with its parent entity in UK directly and got those medical devices, right? Now what happens, that entity's management took a decision to reorganize entire supply chain structure. That is, they would have, so they decided to set up a regional center in China, for example, right? Now the orders are to be placed by the Indian entity with the Chinese regional center, and then from Chinese entity will procure that particular goods from the UK entity, correct? This is how we say as business reorganization, right? There has been no change of profit, income or losses on assets or Indian entity, but still if there has been such type of change, Indian entity is required to report such change in form 3CEB. In practice, I have not seen the entities reporting such type of transaction unless they see there seems a big risk out of that, then you have to report, but I have not seen entity reporting this type of transactions. But OECD provides for special guidance on this business restructuring and reorganization transaction as well. You can read from OECD guidelines as well this part. So that is where, in case if you come across such type of transaction also, you would be required to undertake the analysis and then appropriately take the positions. In case if the materiality of the transaction is low, then you may, I cannot say that you can tell client not to report that, but have a conservative view. In case if that is possible, and if you think that it is more riskier for not reporting such type of transaction, don't go ahead with that type of positions, right? So that was one example. The other example was, let me also tell you that there was one agreement between, let's suppose UK company and India company to render marketing support services, right? Where India company was rendering some market analysis and support services to UK company. What happened, that UK company got acquired by some other group, and there was this agreement between India company and prior UK company. UK company got acquired by a new UK company by other group, right? Now that new UK company opened its subsidiary in India with a new ICO, not the previous ICO, right? It opened the new subsidiary in India. Now particularly on account of happening of that event, the intercompany agreement between I company and the old UK company had to be terminated. So this was also one of the situation which may arise under this specific scenario, which is we call as business restructuring and reorganization, because you are restructuring the entire business, and that's where it is better to report such transactions rather than not reporting such transaction, and you should go ahead with the benchmarking also of that transaction. Under practical scenarios, you might have to struggle in benchmarking, but you have to, do the benchmarking exercise. You have to put a logic. See, benchmarking is nothing a rocket science, but you have to put a logic to say that why you are taking this position, why that transaction has happened at the price at which it should have happened, right? So that is what benchmarking is all about. We'll come to computation of ELP in the next session, but that is where, right now you need to concentrate on the definition of the transaction, international transaction. So types of transaction covered under 92B1 part. Now I'll just go ahead with 92B2. So guys, 92B2 deals with deemed international transactions. So if there is a question that, okay, there has not been the transaction under 92B1, that is between associate enterprise, but there could be a transactions also, different category of transaction under 92B2. I'll just open that part as well. Now, if you see here, just a second, okay, yeah. If you see here, what is a deemed international transaction, which is 92B2. Now you saw that under 92B1 there was transaction between two associated enterprises, whether or both of them, either or both of them were outside India, that didn't matter much, but yes, there was an international transaction, right, between two associated enterprises, right. 92B2 says that there could be, the two enterprises can be also said to be associated enterprise, and the transaction between them can be, classified as international transaction when there exists a prior agreement in relation to a relevant transaction between such other person and the associate enterprise, or the terms of the relevant transaction are determined in substance between the other parties, that is two third parties, whether or they both are resident or not. Now let me just read the entire 92B2 what it says. What 92B2 says, that a transaction entered into by an enterprise with a person other than associated enterprise be deemed to be an international transaction. So a transaction is happening between two unrelated parties, right? Two non-associated enterprise. Let me just put it that way. Then also that will be deemed to be an international transaction between two associated enterprise if there exists a prior agreement in relation to the relevant transaction between such other person and the associated enterprise, or the terms of the relevant transaction are determined in substance between such other person and the associated enterprise, where the enterprise or associated enterprise or both of them are non-resident, irrespective of whether such other person is a non-resident or not. How do we understand that? Now there is a situation here where there is an AE of ICO, right? So you need to understand that ICO and AE are two related parties, related enterprises, associated enterprises. Now AE has an agreement with the third party to render services to I company, right? So wherein the I company will make payment to third party and the agreement is between the AE and third party. It can be written oral or on mail. I mean, there is no such mandate that it should be written only. It can be oral agreement or on mail also. But on basis of price which has been negotiated by this AE with the third party, this third party is rendering services to ICO. Now, what happens that ICO and third party are two non-associated enterprise predominantly, but with the advent that the AE has this prior agreement or terms agreed with third party to render services to ICO, the transaction between ICO and the third party becomes an international transaction. So it will be told as deemed international transaction and it will be required to be reported under form 3 CEB and a benchmarking needs to be done for that transaction as well. That is what the understanding is. We'll also read the note. So there have been certain judicial pronouncements wherein certain benches of the tribunal have held that 92B2 does not cover transaction between two Indian entities. So there are certain rulings available also there. However, in line with the clarification provided by Finance Act 2014, it can be inferred that deemed international transactions would also cover cases where both the parties to the transaction are Indian entities. Now the clarification has also come in 2014, which clarifies that irrespective of the fact that this third party is in India or not, in case if that transaction has been influenced with the help influenced by the AE of ICO, then the transaction between ICO and third party is also required to be benchmark. I hope this clarifies. Now there is also one debatable model, whether this type of transactions are also covered or not. Again, we have to follow conservative basis. In case if you specifically identify such type of transactions, please try to advise your client for reporting of that transaction under form 3 CEB and do take the appropriate analysis. Now there's this debatable model also I wanted to discuss. Now there's a situation here, right? So again, ICO and AE are both associated enterprises, right? And there is this third party and then there is this AE of the third party, right? Now there is an agreement between AE and the AE of the third party, right? There's a prior agreement. Now due to that agreement, this third party which is there in India, which is the subsidiary of AE, is providing services to ICO. Now whether or not this can be considered as a deemed international transaction or not. So this may happen when the major companies have a global agreement with the global service providers. Like for example, MasterCard may have an agreement with IBM to render all the MasterCard entities in entire world the IT services to those entities from their regional companies, from IBM's regional companies. So such type of agreements may happen and it has been a debatable model. But as you know, in this case the risk would be very less because the terms would have been agreed at the higher level. But obviously if the two groups are not related to each other, they don't have any type of relationship, you can justify well that the same price would have been paid in the third party scenario also. But it is important that you report that transaction under form 3 CEB. If you don't do reporting and you don't take analysis or you don't have documentation to justify that arm's length analysis, then it is not advisable in such scenario. So you have to be conservative, maintain the documentation. I hope this 92B2 clarifies. There is also one more thing for the same. I'll just draw your attention to this judgment of Novo Nordisk. You can see the citation. The concept of transaction between two residents being regarded as international transaction was implicit in the scheme of the TP provision if it impacted or eroded the tax base in India. So we need to understand also one thing practically. So this is a practical view which has been taken by the tribunal, that every time you don't have to go and justify that whether that transaction was at arm's length or not, even if it's so in case of deemed international transaction. Why so? Because you have to also see the practicality of the transaction. If that transaction was bound to happen also with the third party which was not related also, which was not deemed also, in such scenario also the same price would have been paid by this taxpayer entity. Then you have to follow that particular practical approach also. So that's where there is this judgment which says that if there is no erosion of tax base from India, you are not required to take a pain. This is a judgment, so you have to take the analysis, but yes, this is a support judgment which is available, right? I hope this clarifies. So guys, this was the thing of 92B. Hope you understood this entire 92B. We'll go ahead. I'll join you in the next video when I'm explaining the specified domestic transaction. Enjoy, keep learning, and take it easy.